China's exports grew by 8.7% in August 2024, reaching over $300 billion. This marks the fastest growth in 17 months, outpacing analysts' expectations of 6.5%. But what's driving this surge, and can it be sustained in the face of rising global tensions? This unexpected growth comes at a time when China's economy faces numerous challenges, both domestically and internationally. The contrast between this export performance and the prevailing economic headwinds raises important questions about the underlying drivers of China's trade success. In this video, we'll examine the factors contributing to China's export surge, exploring the complex interplay between traditional Western markets and emerging partnerships in Southeast Asia. We'll analyze how China's strategic pivot towards ASEAN countries is reshaping global trade patterns and potentially providing a buffer against Western tensions. Additionally, we'll investigate whether this export growth masks deeper economic vulnerabilities within China's domestic market. China's export surge tells only half the story. The real puzzle lies in its traditional Western markets. Despite escalating trade tensions, China has managed to increase exports to the EU by 13% and the US by 4.9%. This defiance of expectations reveals a complex web of economic maneuvering that's reshaping global commerce. Historically, China's trade relationships with major Western partners, particularly the US and EU, have been crucial to its economic growth. These markets have long been the primary destinations for Chinese goods, driving the country's export-led development model. However, recent years have seen increasing challenges to these relationships, with trade disputes, tariffs, and geopolitical tensions threatening to disrupt established patterns. Despite these headwinds, China's export performance to Western markets has remained surprisingly resilient. The 13% increase in exports to the EU and 4.9% rise to the US in August 2024 demonstrate China's ability to maintain trade relationships amidst geopolitical challenges. This unexpected growth raises questions about the underlying dynamics at play. One key factor contributing to this export surge is the rush by Chinese manufacturers to fulfill orders ahead of anticipated tariffs from various trade partners. This urgency indicates that geopolitical tensions are directly influencing trade dynamics. Manufacturers are essentially racing against time, trying to ship as much as possible before potential new trade barriers are erected. The US-China trade relationship, in particular, remains fraught with challenges. Ongoing sanctions and export controls aimed at curbing China's technological advancements have heightened tensions and complicated trade negotiations. These measures, designed to protect national security interests and maintain technological superiority, have created a complex landscape for businesses operating across borders. Despite these pressures, China's manufacturing sector has shown remarkable resilience. Some analysts predict that demand for Chinese exports could remain strong due to two key factors: the relative affordability of the yuan and the ability to reroute exports to avoid tariffs. This adaptability suggests that China's export machine is more flexible and robust than many had anticipated. However, this export growth comes with its own set of challenges and questions. China's leaders are grappling with a dual challenge: sustaining robust export growth while addressing domestic economic weaknesses. The declining import figures raise concerns about the overall health of the Chinese economy, pointing to potential weaknesses in domestic demand. This situation creates a complex picture of China's economic position. On one hand, the country is demonstrating its ability to navigate international trade tensions and maintain export growth. On the other, there are signs of underlying economic vulnerabilities that could pose long-term challenges. While China navigates Western tensions, a seismic shift is occurring in its trade dynamics. What if the key to China's export success lies not in its traditional markets, but in a pivot towards its Asian neighbors? The rise of ASEAN as China's largest trading partner hints at a broader strategy that could reshape global economic patterns. ASEAN, the Association of Southeast Asian Nations, has emerged as China's top trading partner. Trade between China and ASEAN grew by 10% year-on-year, reaching 4.5 trillion yuan, $63.2 billion, in the first 8 months of 2024. This surge in trade volume underscores the increasing importance of Southeast Asia in China's economic landscape. China's shift towards ASEAN is part of a larger plan to diversify its trading partners and reduce dependency on Western markets. This approach serves as a buffer against rising tensions with nations like the United States and the European Union. By strengthening ties with its Southeast Asian neighbors, China aims to create a more resilient economic network less susceptible to geopolitical pressures. The dual circulation strategy plays a crucial role in this economic reorientation. This approach aims to bolster domestic consumption while maintaining China's global trade roles. It's a delicate balancing act, designed to create a more self-reliant economy that can withstand external shocks while still benefiting from international trade. China's trade with ASEAN now accounts for approximately 15.7% of its total import and export value. This significant percentage highlights the growing importance of the region in China's trade landscape. The Regional Comprehensive Economic Partnership, RCEP, which includes ASEAN nations, further facilitates this economic integration, reducing reliance on Western markets. Landmark agreements like the ASEAN-China Free Trade Agreement, ACFTA, and RCEP have accelerated trade growth through tariff reductions and closer supply chain links. These agreements provide a foundation for long-term economic cooperation, potentially reshaping global trade patterns. China's increasing trade with ASEAN is part of a broader response to rising trade barriers and geopolitical tensions with the West. By diversifying its trading partners, China aims to ensure economic resilience in the face of potential disruptions in its relationships with traditional Western markets. This shift in trade strategy is creating a new economic landscape with far-reaching implications. As China deepens its economic ties with ASEAN, it's not just securing alternative markets for its exports, but also influencing regional economic policies and potentially altering the balance of power in global trade negotiations. The pivot towards ASEAN represents a significant change in China's approach to international trade. It's a move that could have lasting effects on global economic dynamics, potentially leading to a more multipolar trade environment. This strategy might also provide China with increased leverage in its dealings with Western nations, as it becomes less dependent on these markets for its economic growth. China's export growth of 8.7% seems like a triumph, but it may be a double-edged sword. With imports rising a mere 0.5%, what does this widening trade gap reveal about the health of China's economy? The answer could challenge our understanding of global trade relationships and economic resilience. This paradox becomes evident when we examine China's trade surplus, which expanded to $91.02 billion in August. While a positive trade balance can boost short-term economic growth, it may also mask underlying vulnerabilities in China's economy, particularly in domestic consumption. The manufacturing sector, traditionally a cornerstone of China's economic strength, faces significant challenges. For 6 consecutive months, the Purchasing Managers' Index, PMI, has remained below 50, indicating a contraction in manufacturing activity. This persistent decline suggests that despite strong export figures, the broader economic picture is more complex and fraught with difficulties. China's reliance on exports as a primary growth driver is raising concerns among economists, especially as the US economy shows signs of weakening and trade tensions continue to escalate. Zhang Jiwei, president and chief economist at Pinpoint Asset Management, aptly summarizes this concern. The question is how long exports can stay strong, given the weakening US economy and the rising trade tension. This situation puts China's leaders in a precarious position. They face mounting pressure to stimulate domestic consumption to balance the economy. However, consumer confidence remains low due to ongoing economic uncertainties. The stark contrast between robust export growth and weak domestic demand highlights a critical imbalance in China's economic structure. The disparity between export performance and domestic economic health raises questions about the sustainability of China's current growth model. While exports provide a short-term boost, they may not be sufficient to address long-term structural issues within the economy. This imbalance could potentially expose China to external shocks and economic volatility. Moreover, the heavy reliance on exports makes China vulnerable to changes in global demand and geopolitical tensions. As trade relationships with traditional partners like the US and EU become increasingly complex, China's ability to maintain its export growth may be challenged. This underscores the importance of China's strategic pivot towards ASEAN countries, as discussed earlier. The situation also highlights the delicate balance China must maintain between pursuing export-driven growth and addressing internal economic challenges. While exports provide immediate economic benefits, neglecting domestic consumption and investment could lead to long-term instability. China's economic strategy moving forward will likely need to focus on fostering domestic demand, boosting consumer confidence, and continuing to diversify its export markets. This multifaceted approach could help mitigate the risks associated with over-reliance on exports and create a more balanced and resilient economic structure. China's 8.7% export growth defies expectations, highlighting its economic resilience amid global tensions. This surge, coupled with a pivot towards ASEAN countries, showcases China's ability to adapt to changing trade dynamics. However, the widening gap between exports and imports reveals potential vulnerabilities in domestic consumption. China's dual circulation strategy aims to boost internal demand while maintaining global trade roles. This approach, along with initiatives like the Belt and Road, is reshaping economic landscapes and reducing dependence on Western markets. The focus on self-sufficiency and trade diversification serves as a lesson for other nations facing geopolitical pressures. As the US and allies view China's economic policies as a security threat, the future of global trade hangs in the balance. The shifting alliances and increasing economic nationalism are redefining international commerce, leaving us to ponder. How will these changes reshape the global economic order in the coming decades?